Following are the summarized balance sheets of P Limited and Q Limited as on 31st March 20X1. They have given us the liabilities, share capital. They are saying share capital, equity shares of rupees 10 each. So it means there are 60,000 shares over here and there are 30,000 shares over here. They are saying 10% preference shares of rupees 100 each. So 2,000 preference shares over here and 1,000 preference shares here. Reserves and surplus, secured loans, debentures are there, trade payables. Fixed assets are given on the asset side, investments, and then inventory, trade receivables, cash at bank. So a pretty regular asset side is given. Details of trade receivables and trade payables are given. So they have given you a breakup now, debtors and bills receivable and creditors and bills payable. Fine. Fixed assets of both the companies are to be revalued at 15% above the book value. They are saying fixed assets of both the companies. That means purchasing company as well as the selling company. We have to do 15% above the book value. So you are doing upward revaluation of a fixed asset. Any revaluation gain, it will be transferred to revaluation reserve. Inventory in trade and debtors are to be taken at 5% lesser than their book value. So inventory will be reduced by 5% and debtors will be also reduced by 5%. Both the companies are to pay 10% equity dividend. Preference dividend is already paid. We very much know equity dividend cannot be paid till the preference dividend has not been paid. So it's just a clarification. Preference dividend is already paid. After the above transactions are given effect to, P Limited will absorb Q Limited. So P Limited is turning out to be the purchasing company and Q Limited is turning out to be the selling company. Okay. They are saying 8 equity shares of rupees 10 each will be issued by P Limited at par against 6 shares. So as far as equity shares are considered, 8:6 is the share exchange ratio. 10% preference shares of Q Limited will be paid at 10% discount. So we are settling the preference shareholders as a discount by issue of 10% preference shares of 100 rupees at par in P Limited. So preference shares, if we just see of Q Limited, if I return back to the balance sheet, preference share capital of Q Limited, it is 1 lakh. We will reduce it by 10%. That means 90,000. That's going to be our agreed value of the preference shares. 12%, information 3, 12% debenture holders of Q Limited are to be paid at 8% premium by 12% debentures in P Limited issued at a discount of 10%. That's very interesting. We will take care of this particular adjustment. But yes, as far as the purchase consideration is considered, we have to ignore this information. What we pay to equity shareholders and preference shareholders, only that becomes part of the purchase consideration. And then they are saying rupees 30,000 is to be paid by P Limited to Q Limited for liquidation expenses, and sundry creditors of Q Limited include rupees 10,000 due to P Limited. This is something that we will consider later. It does not have anything to do with as far as the initial solution of the question is considered. What are the questions? Part A, journal entries in the books of P Limited. So purchasing company's journal is required. And in B, they are saying statement of consideration payable by P Limited. Now, when I will prepare the journal, obviously I'll have to record an accounting entry with respect to the purchase consideration. So there is no point of solving part A first. We should do part B first. We should first calculate the purchase consideration, and only after that we can record the accounting entries. So as we solve this question, we will solve first part B, right? So let's work out what is the purchase consideration. So we say determination of purchase consideration. Yes. particulars amount to equity shareholders. So we know our share exchange ratio for equity shareholders is 8:6. What are the number of equity shares in the selling company? 30,000. So 30,000 into 8 by 6, that is turning out to be 40,000 equity shares of P Limited at the rate rupees 10, 4 lakhs. To preference shareholders, yeah, in preference shares, they are saying 10% discount. So 1 lakh is there in the balance sheet. I deduct 10% from it. That means we will pay 90,000. And preference shares, our preference shares are of rupees 100 each. So 90,000 I am dividing by 100. So 900 preference shares will be issued by us. So we say 900, 10% preference shares of P Limited at the rate rupees 100. So that is 90,000. Total 4 lakh 90. So we get our purchase consideration. Our purchase consideration is 4 lakh 90,000. That's the working. This answers part B. Okay, can show away. You can say part B. Part B is what we have done. If you check with the question, they are saying statement of consideration payable by P Limited. See, this statement is giving you purchase consideration as well as the settlement of the purchase consideration. Both have been taken care of. Now, part A is journal. We are supposed to record the accounting entries in the books of the purchasing company. See, in the books of the purchasing company, we will be recording the assets and liabilities at their agreed values. This time they have given you agreed values. They are saying fixed assets will be increased by 15%. They also say debtors will be taking over at 5% less, inventory 5% less. So this is the information which they have really given, right? And then there is also information 3. That's what I want to discuss now. Information 3. In information 3, they are saying that 12% debenture holders of Q Limited are to be paid at 8% premium by 12% debentures in P Limited issued at a discount of 10%. Now, when I will record the accounting entry, I'll have to take care of these debentures also. Assets will be recorded at their agreed values. Even the liabilities will be also recorded at their agreed values. So I'll do a separate working for the same, and then we will go for the journal entries. We say agreed and settlement value of debentures of Q Limited. Okay. agreed and settlement value of debentures of Q Limited. Check with the balance sheet how much debentures are there. 1,50,000 debentures are there in Q Limited, and then we are going to settle that at 8% premium. So agreed value of debentures equals to 1,50,000, and I will increase it by 8%. We are ready to pay them premium. So agreed value is turning out to be 1,62,000. Okay, 8% premium. And we are going to issue our 12% debentures at a discount of 10%. So that will give you the settlement value of the debentures. So we say here, settlement value of debentures equals to, I will issue debentures at 10% discount. That means this 1,62,000 is representing 90% of my face value. So that is turning out to be 1,80,000. So implies discount on issue of debentures, right? You can yourself see now. It will be 1,80,000 minus 1,62,000, which is turning out to be rupees 18,000, right? 18,000 is representing 10% of the discount. So we will answer now part A, Journal of P Limited, right? We will prepare the journal. We are first increasing the value of the fixed assets. So we say fixed assets account debit. In balance sheet, it is 7 lakhs. Both companies are increasing, so 15%. Turns out to be 1,05,000. 2, revaluation reserve account, 1,05,000. We are paying equity dividend now. Reserves and surplus account debit. Our equity share capital is 6 lakhs and we are paying dividend at the rate of 10%. So 60,000. 2, equity dividend account, 60,000. In continuation of the same, we will pay the dividend in cash now. Equity dividend account debit to cash account or to bank account, whatever you say, 60,000. So this is considering the transactions before we acquire Q Limited, right? If you're still writing, you can pause the video here. Yes, it's time now to record for the acquisition of the business. So we say business purchase account debit. Business purchase account debit. Our purchase consideration is 4,90,000 to liquidator of Q Limited account, 4,90,000. Let's incorporate the assets and the liabilities that we will take over. We are following purchase method, so we will record at their agreed values. Fixed assets account debit. In the balance sheet, the fixed assets of the selling company is 2,50,000. We will appreciate that by 15%. 2,87,500. Investments account debit 80,000. Inventory we have to reduce in value, so 3,20,000 minus 5%, 3,04,000. We take over the datas. They have given trade receivables. You just see in the additional information, that's where the breakup is given. We have to reduce the datas also by 5%. $180,500. Bills receivables, right? Account debit 20,000 as it is. Cash at bank account. Be careful here, cash at bank. Selling company has 40,000, but selling company will also pay equity dividend. Selling company is paying equity dividend of 30,000, right? So the cash that is left is 10,000, right? Incorporate the liabilities now. So just leave one line for the balancing, and then we say to debentures account. We are taking over the debentures. Remember, the debentures will be recorded at their agreed value. Okay, agreed value, debentures, 1,62,000 from your working. Here it is. Agreed value of debentures. We are referring to the agreed value of debentures, 1,62,000. So that is what I'll record here. 1,62,000. To creditors account, 1,25,000. To bills payable account, 25,000. To business purchase account. To business purchase account. By the purchase consideration, 4,90,000, right? 4,90,000. We need to balance this accounting entry now. 287,500, 80,000, 3,04,000, 180,500, 20,000, 10,000, and 1,62, 1,50, and 4,90. Okay, I'm getting 80,000 rupees. The line that you have left blank, you can write there. You'll say to capital reserve account. To capital reserve account, 80,000. That's the balancing of the accounting entry. If you're still writing, you can just pause the video here and complete your accounting entry for the incorporation of assets and the liabilities and the resultant capital reserve. Settle the purchase consideration. Liquidator of Q limited account debit 4,90,000. We are issuing our shares, so to equity share capital account, we are issuing shares at par 4 lakhs. To preference share capital account 90,000. Taken care of. Let's settle the debentures now. Debentures of Q limited account debit, right? We have taken over a liability of 1,62,000. We will settle this by issuing our debentures at a discount. Discount on issue of 12% debentures account debit 18,000 to 12% debentures account, right? We are issuing our new debentures 1,80,000. This we will record with the settlement value. This is what we are doing. See, this 1,62,000 that we are getting is the agreed value. So incorporate this as a liability, and this settlement value, right? This is agreed value of debentures of Q Limited. Well, this is settlement value of debentures of P Limited, right? Purchasing company. 1,62,000 is for the selling company and 1,80,000 is for the purchasing company. There is a mutual obligation to be taken care of. Creditors account debit 10,000 to debtors account 10,000. Creditors reduced by 10,000, debtors reduced by 10,000. And finally, we have made payment of some liquidation expenses. Any expenditure which is relating to liquidation, it should be debited to goodwill account. But in this question, we do not have any goodwill. We have capital reserve. So instead of goodwill, we will debit the capital reserve. So we say capital reserve account debit 30,000 to bank account. This is for meeting the liquidation expenses. So that is our journal. This was the question. I hope the workings you have already done. Journal accounting entries. Just see. This is the first 3 accounting entries. Have you missed anything here? Pause the video, complete it. This is for the business purchase. And this is, of course, one of the main accounting entries. If pending, pause and complete. This is for the settlement of purchase consideration, issue of our debentures, and then the elimination of mutual obligation, and finally payment of the liquidation expenses.